CLNV is continuing mighty strong. Let's go ahead and find out what could happen for the following sessions. What is up, you guys? Thank you so much for stopping by once again on this happy Friday. This is ARCa coming at you with a CLNV, technicals, raw price action, and statistical threat of analysis. Before we get started, please make sure to subscribe to the channel, like the video, and share the video with a friend so that you and them could consider joining our trading community and Discord called ARCa. With that said, let's dive right into the charts. Okay, so let's go ahead and update the entire thing so that new viewers can also keep up with us. So CLNV on the buy daily chart, we are looking at a massive descending channel here, and this descending channel typically signals us for an incoming reversal. As you can see, it has been following what we talk about very often in this channel, and it's called the golden rule of three, where we test the resistance of the channel 1, 2, 3 times, followed by a capitulation event, and then the true attempt at breakout on number 4 test. Okay, so that would be the true breakout test. Now, just to follow up, okay, these are, every candle here is a 2-day iteration, meaning it takes about 2 days for every candle to finish, right? Well, yeah, approximately. So, business days to be exact. So now, we can see that we broke out very nicely, and we came back and did the obvious. Okay, we actually came back and tested the newly converted resistance into support. We confirmed it all before a bounce to the upside and continuation onto the upside. Okay, so now what could be happening for price action? Okay, so it looks as though after this uptrend, we have already begun the process of building this what's called a bullish pennant. Okay, so this, I'm going to just go ahead and highlight it for you. So this is called a pennant, okay, and they typically happen after or during an uptrend, okay? So usually when we're on that uptrend, that makes this pattern be considered a continuation pattern, okay? So towards the upside in particular, okay, just so that we can gain some more confirmations and validations that we are going towards the upside. Very important thing to notice within the price action structure right now is that we've actually now faced the resistance that we were talking about for quite some time at the 2.618 at about 7 cents, okay, 707 to be exact. So yes, this was an expected area of resistance before pulling back, but let's go ahead and move on now to the next chart and see where we are. Okay, so this is now the broadening ascending wedge that we've been talking about for quite some time. And the reason why I'm bringing this up right now is because I wanted to touch on a couple things. First, particularly the simple moving averages, okay? So the simple moving averages are playing a very important role right now. If you can see this trend line here, I'm sorry. You know what, I can make it actually a little bit thicker so you can see exactly what I'm talking about. Okay, there we go. I'll just go ahead and make it like that. And this thicker one right over here, this is the 50-day simple moving average. And as you can see, we've been using that average as a form of support and kind of a guide towards the upside. Okay, so this, I guess you can kind of consider the 50-day simple moving average as that, as kind of like the governor for our lows, okay, or governing our lows. So now an important thing to notice here is that we have now on the daily chart made the SMA 10, the 10-day simple moving average represented by this green line, we have converted it officially into a form of support. Very bullish, okay? So that means now we have a valid area of support, and we can continue to the upside with several areas of support underneath this as well, okay? So very important things that we are looking at right now, okay? So the other thing that I wanted to touch on was the were the time fractals. Okay, so now what I mean by that is that it seems like the formation is following a type of timed wave event. Okay, so if you can take a look at this iteration here, this is a measurement of time from the beginning of the wedge, from the very genesis of the wedge to the first wave, and that actually gives us a time period of 23 days. Okay, now from that period to the next wave, we can actually see that we're at 26 days. Okay, so now from the next candle to the to the next wave, we're actually looking at a fractal of 23. So we have 23, 26, 23. Okay, so if we were to imply that the next fractal would be at about 26 or 23 days or something like that, given that there is a weekend in the way, of course, and a long weekend at that, so it could be a little bit extended into 29 days, we can only assume that the upside could be met by either, I don't know, anywhere because of the weekend. I'm not sure how this is going to work on the fractal thing, right? But anywhere between Tuesday the 17th to about maybe Thursday the 19th, around there. So if we were to imply that 23, 26, 23, 26 or whatever is going to adjust because we have this long weekend. So yeah, we can only assume that we would be making that high around there. And there are a lot of signals that are pushing towards that upside. So let's go ahead and validate some more of those signals now, or go over them, sorry. So this is that ridiculous cup and handle that we've been talking about for quite some time. All right, I'm just jotting it there because sometimes it's relatable, right? But we know that the cup and handles don't have that great of a hit rate. But the important thing right here is not the cup and handle. It's in fact the resistance levels that we were talking about. And particular to the knot 618 at, let's see, at 0669, or yeah, it's right over here. So 0669. So we actually have now converted that into a form of support. That alongside the SMA 10 from our second chart, right over here. That alongside the SMA 10 serving as support. Also, the fact that we have now crossed the 2-spot 272 and touched that 2-spot 618 resistance. Now we have that 2-spot 272 at 640 as support, at 0640, of course. And now the next one is the next validator that actually gives us a continuation to the upside as well. And so now this is the third validation point for the upside. Okay, so we are looking at the statistical chart here. Okay, so this is where I perform the statistical analysis. For the new viewers, this is volatility you're looking at right now. Okay, this is volatility represented by this indicator BBWP. Volatility is direction neutral, and I tend to pair it with this indicator stochastic momentum, which is proprietary to TradingView software. Okay, so this gives us that bias for direction. I have backtested the momentum indicator by itself throughout several tickers, and I'm getting a percentage of accuracy and guessing the asset's direction between 75% to about 91%. So it's not perfect, but it's very, very, very credible, or it's good enough for us to factor into our probabilities, right? So in this case, let me just go ahead and make this a huge window, and you can see that we are clearly pivoted towards the upside, and the official signal fired, let's see, on December 20th. Okay, so from December 20th to now, we've actually been moving towards that upside upon that firing of the signal. Okay, so what was the criteria for that signal to be fired? Well, first of all, we needed volatility to reach the critical volatility zone, which could be anything within the 90 percentile. Okay, so we have reached it. Volatility reached it and started contracting towards the downside. When that contraction phase starts, we need for the momentum oscillator to also be pivoted towards the upside. That criteria, making this little oval here, that criteria is essentially needed and required in order for us to meet the statistical upside. Now, what statistical upside, right? So based on volatility versus momentum, okay, anytime that we have reached that critical volatility zone within the 90 percentile and started that contraction phase towards the downside, I have taken note of that iteration's, first of all, the duration, right? So in this case right here, you can see 18 days. And also I've taken the iteration's upside thrust. This was a 205% iteration, okay? And the amount of times that volatility versus momentum guessed the upside correctly versus incorrectly. Okay, so that gives us a statistical mean. And please understand that these are statistical metrics. They are not whatsoever the truth or a sense of future. Okay, this is not a certainty. It's not based on certainties. It's based on statistics. That's why the word is different. Okay, so this is just a probabilities based metric. Okay, and it's very much used often in the trade. Okay, statistics primarily. All right, so in this case we have taken note of every iteration that has happened in that fashion throughout the entire trading history of CLNV, particular to the 3-day chart. Okay, so that gives us a total of 10 iterations, of which 7 were guessed correctly to the upside. That gives us an averaged upside accuracy of 70% with an averaged upside thrust of 4,347% with an average duration of about 84.142 days. Okay, so this is the proof of work right down here. All right, so now what we have done thus far since the firing of the signal is we have already moved about 120% to the wick high of this right over here on January 3rd. Okay, so now we're coming right back up to it, and that doesn't mean we're going to stop at it. It's probably just going to be a small resistance along the way, but as long as volatility maintains itself contracting and stochastic momentum continues this upside pivot, the upside play is absolutely still in play. Okay, but remember, it doesn't mean that we're going to go up 4,300%. It only means that we have several variances within that same criteria that we're performing right now. Okay, because this one right here moved up 205, this one moved 500%. See, this one here 17,000%. Wow, there's several variances within this that had us come up with this statistical average. Okay, so now know that there are several variables for us to look at within that area, within this percentile. Okay, so we are looking good thus far in the play. The statistical play is definitely still on and definitely suggesting a continuation of it. Okay, so let's go ahead and move on now to the last part of the analysis, which is going to be our RSI. Okay, actually I just want to check one thing on the 12-hour or the daily just to make sure that we are okay. Yeah, actually yes, I wanted to touch on this as well. Okay, so this is the divergence chart. So divergence is, or divergence, however you pronounce it. I'm over here, div, you know, like in that Penguins movie, whatever. Anyway, so the divergence is the opposition of price action versus momentum. Okay, so we can see that we have several drives of hidden bullish divergence. Okay, and now this is particular to phantom drives. Okay, why phantom is because we're having the cross price action to get from point A to point B, all this price action being crossed. Okay, so now we have 1, 2, 3, 4, 5 drives of phantom hidden bullish divergence. Okay, and you can see that from that pivot we are still suggesting that upside massively. And a very good thing here is on the 12-hour RSI, the purple line, which signifies a signal, or is a signal of the RSI itself. The 14-day simple moving average is the pink line, has crossed that pink line, and that is a very bullish thing. Another thing to notice is that we're approaching the bullish control zone, the bull strength percentile. Okay, and the reason why I can say we can cross it is because we're so close to that border. Okay, usually when we're at about 58% of that 60% border, that is usually a percentile for us to consider a gravitational pull right into that following zone. Okay, so this is looking very good. This is looking very bullish thus far. So now let's go ahead and open up that multi-pane. Here we are. And we're going to start off with the 30-minute immediate short-term time frame, just like we always do. Okay, you guys, so I don't have my diagram up right now, but this upper half is the bullish control zone. The bottom half is the bearish control zone. The inner workings of either is called the weakness percentile, and the outer workings are called the strength percentile. Okay, so this in particular being the bull strength percentile. All right, you can see the immediate short-term time frame RSI has now crossed into the bull strength percentile. Okay, we have a little bit of resistance up here, right at that 14-day moving average, which means that we can actually face a little bit of resistance before finding some sideways trading in the immediate short term. 30 minutes usually live out really fast. Okay, so now Yeah, let's look at the buy daily, and you can see that the buy daily is actually still pivoted towards the upside, and we're quite a ways away from that 14-day moving average, suggesting that continuation to the upside. Very good stuff, okay? So now the 6-hour time frame has reached that border. It looks like it has lost a little bit of bullish momentum, but since we are at that gravitational zone, we can actually have it pull us right back in, right into the following zone, which would be the bull strength. Okay, so the daily time frame is still suggesting upside. It has a fresh cross above the 14-day moving average, very bullish, and now we're in that gravitational zone, getting this is more prone to getting that push up to the following zone, the bullish, the bull strength percentile. Okay, so we're still looking very good. Let's look at the buy daily. You can see that there's still upside on the buy daily. The 3 days still suggesting upside. And man, the 5 days still suggesting upside. The weekly still suggesting upside. My goodness, and aggressive upside on the bi-weekly. So what we're looking at here, you guys, is absolutely a continuation for several days. Okay, so I have several targets that we have talked about thus far. Okay, so now particular to this ridiculous cup and handle, it does have an objective. Okay, you take that objective by taking a trend line from the top of the cup, right, to the bottom, to the lowest point of the cup, and we apply it to the handle. And we can see that we have a trend line. The trend line ends right in confluence with the 3.618 at about 33.09. Now, if we go back into this chart here, you can see that the time fractal that we're talking about would essentially land us at about 33.17, 33.30, right around there, which is absolutely in confluence with the cup's overall target. Okay, so there is a lot of rhyming happening right now. So definitely watch out for what could be happening next. Okay, if we were to apply the full 4,300% to the upside, which is not always the case, we don't always have to realize that. Okay, remember, it's a statistic. We are looking at about $1.66 overall. Okay, so seeing that we have a massive upside thrust in the weekly, all the way up to the weekly, anything can happen here, you guys. Okay, so just don't know that I'm not a financial advisor. Take whatever I do show and iterate within these videos as just a form of entertainment, as I can't suggest for you to buy or sell any assets. Okay, I need you to do your own DD and everything will be just fine. Okay, you guys, if you need to reach out to me, go ahead and refer the links in the description below, as you'll find the Twitter and the Discord invite link there as well. Okay, so please know, if you feel like you want to chart alongside with me, go ahead and refer to the link also below those Discord and Twitter. It's the TradingView link, and you'll be directed to a page that will essentially have you choose a subscription package or a free subscription for the TradingView software. Okay, guys, definitely check that out, as I am an accepted affiliate, and it would help my trading future out greatly. Okay, you guys. So with that said, I wish you well, a very good long weekend, and I will catch you at the bell on Tuesday. Adios.